Welcome to Explain the Charts, everyone. Today, September 25th, 2025, we're doing an in-depth analysis on QQQ, the Invesco Nasdaq 100 ETF, looking at both the latest news and detailed chart data. The Nasdaq has seen incredible highs recently, but also a sharp pullback, leaving many wondering, what's next for this tech titan? We'll explore key price levels, understand trends and reversals, and uncover what to look for when deciding your next trade. Let's kick things off with the headlines that have been moving the market. Just last week, the Nasdaq extended a record streak, seeing its best weekly performance since early August, fueled by continued AI enthusiasm and a highly anticipated Federal Reserve rate cut. Companies like Nvidia, Alphabet, and Tesla surged to new highs, with Nvidia securing a massive $100 billion OpenAI investment and Tesla reaching 2025 highs. However, the tide began to turn around September 23rd, when tech stocks led a broad sell-off, causing a roughly 1% decline in the Nasdaq. Fed Chairman Jerome Powell contributed to market jitters by stating that equities are fairly highly valued, echoing warnings about market froth from other investors. Adding to the bearish sentiment, China launched an antitrust probe into Nvidia and an anti-dumping investigation against U.S.-made semiconductors, impacting key tech players. Furthermore, economic data like the Empire State Manufacturing Survey for September showed a sharp decline, signaling broader economic weakness after 2 positive months. The market is now closely watching upcoming GDP and jobless claims reports, which are expected later this week. Now, let's turn our attention to the charts, starting with the daily time frame to get a macro perspective. Looking at the period from May 2024 through September 2025, QQQ has been in a strong, sustained uptrend, with price advancing from the 440s to recent highs around 602. This overall bullish momentum has been a defining characteristic of the tech sector, driven by innovation and investor confidence. Throughout this ascent, we can identify key support zones that have consistently held, such as the 480 to 490 range, which often saw bounces after minor pullbacks. The psychological $500 level also acted as a significant area of interest, often serving as both minor support and resistance. Conversely, overhead resistance has largely been a moving target as QQQ pushed into uncharted territory, with new all-time highs continuously being established before the recent retreat. Let's narrow our focus to a particularly dramatic period in April 2025, where QQQ experienced a significant correction. From around $475 in late March, the price plunged sharply, bottoming out near $402 by April 7th. This deep and rapid sell-off, accompanied by exceptionally high trading volume, indicates strong bearish pressure, likely correlating with broader market uncertainty or specific tech sector fears at the time. Interestingly, during this period, gold prices surged to unprecedented levels, suggesting a flight to safety among investors as risk assets like tech experienced a sharp downturn. However, the subsequent bounce from the 402 level was equally impressive, demonstrating resilient underlying demand and a quick recovery. This V-shaped recovery highlights that even during significant corrections, the prevailing bullish sentiment was quick to reassert itself, preventing a prolonged downtrend. The $400 level, though briefly touched, proved to be a critical long-term support, with buyers stepping in aggressively. Moving forward, let's examine QQQ's impressive bull run from early August into mid-September 2025. Starting from lows around $550 in early August, the ETF saw a consistent and strong upward trajectory. This sustained climb pushed QQQ towards new all-time highs, eventually peaking above $602 by September 19th. This period aligns perfectly with the news reports of Nasdaq extending its record streak and the prevailing AI enthusiasm, with major tech components like Nvidia and Alphabet leading the charge. The healthy volume accompanying this rally suggests strong institutional and retail buying interest, reinforcing the conviction behind the upward move. Each new high was met with continued momentum, illustrating a market confidently pricing in positive economic outlooks and the anticipated Fed rate cuts. However, the latest daily candles paint a different picture, showing a clear reversal and pullback from those record highs. On September 22nd, QQQ touched its peak around $602.2, but then started to retreat. The subsequent candles on September 23rd and 24th show significant bearish momentum, with QQQ closing lower each day, reaching $596.1 by the end of trading on the 24th. This sharp decline directly corresponds with the news of tech stocks leading a broad sell-off and Jerome Powell's cautionary remarks about highly valued equities. Volume remained elevated during this downturn, indicating that sellers had conviction in pushing prices lower from their recent peaks. This $600 to $602 range has now established itself as a significant resistance level, which QQQ has struggled to breach and sustain. Now, let's zoom in on the 15-minute chart to get a clearer picture of the intraday dynamics of yesterday's trading on September 24th. After opening around 599.58, QQQ initially attempted to push higher, but encountered resistance quickly, creating multiple smaller candles with upper wicks. Around 13:32 Universal Time Coordinated, we saw a noticeable breakdown below the $599 mark, with increased selling volume as the market reacted to negative news. The price then consolidated slightly but failed to reclaim higher ground, forming a series of lower highs and lower lows throughout the afternoon. This consistent selling pressure pushed QQQ down to lows around 593.36, indicating a strong bearish sentiment dominated intraday trading. The inability to recover back to the 598 to 599 range suggests that the recent pullback on the daily chart has strong conviction at the intraday level as well. The trading action concluded near the $596.47 level by the end of the day, showing a slight bounce from the absolute lows, but still a considerable daily loss. Reviewing the entire available 15-minute dataset, we can observe periods of both strong upward momentum and sharp corrections, reflecting the broader daily trends. Looking at the current available data up to the close of September 24th, QQQ has fallen approximately 1.05% from its peak on the 22nd, demonstrating how quickly market sentiment can shift. The price levels around 593 to 594 acted as a temporary support zone during yesterday's intraday trading, suggesting it's an important level to watch if the selling continues. Conversely, reclaiming the 598 to 600 range would be a significant challenge and a strong indicator of returning bullish strength. High transaction counts on these down moves underscore the active participation of traders in the recent sell-off. Understanding these short-term movements is crucial for traders looking to capitalize on quick price swings or confirm directional biases. Now, let's weigh the reasons to be bullish or bearish on QQQ and the conditions that would reinforce these outlooks. Reasons to be bullish include the underlying strength of the tech sector, driven by continued innovation in AI and cloud computing, which has historically shown resilience and growth. Furthermore, expectations of Federal Reserve rate cuts would typically provide a tailwind for growth stocks like those in the Nasdaq, making future earnings more attractive. If the Fed indeed proceeds with a 25 basis point cut this week, as 96% of traders anticipate, we could see a renewed buying spree, especially if accompanying statements are dovish. The market's ability to quickly recover from sharp pullbacks, as seen in April 2025, also suggests strong long-term investor confidence. Conversely, reasons to be bearish include Fed Chairman Powell's recent comments on highly valued equities, which could signal a cautious stance and temper investor enthusiasm. The froth and concentration concerns expressed by investors like Rob Arnett highlight potential risks of overvaluation, making the market vulnerable to corrections. Geopolitical tensions, such as China's antitrust probes and anti-dumping investigations against U.S. tech giants, could continue to weigh on the sector. Any signs of broader economic weakness, like the recent dip in the Empire State Manufacturing Survey, could further justify a bearish stance, as it points to potential slowdowns impacting corporate earnings. A decisive break below key support levels on high volume would validate a more bearish outlook in the short to medium term. To recap, important price levels for QQQ are the immediate resistance around $600 to $602, representing the recent all-time high. A sustained break above $603, ideally on strong volume, would signal a high likelihood, perhaps 70%, of continued bullish momentum, driven by positive Fed news or unexpected tech breakthroughs. The immediate support to watch is the $593 to $594 range, which proved resilient yesterday. A clear break below this level, particularly with high volume, would likely open the door to further downside, perhaps testing the $580 to $585 area with a 65% probability, especially if economic data disappoints. Longer term, the $550 level remains a critical support, representing the August 2025 lows. A fall below this would carry significant bearish implications, with about a 50% chance if overall market sentiment turns sour and the Fed disappoints. For traders, keep an eye on upcoming economic reports, especially tomorrow's GDP and jobless claims, as these could provide significant catalysts. Watch the market's reaction to the Federal Reserve's policy meeting decisions, which are pivotal and could dictate the short-term direction of QQQ. Pay close attention to daily and hourly candlestick patterns and trading volume around these key levels to gauge conviction. A retest of 600 on low volume failing to break higher would reinforce bearish sentiment, while a high-volume surge through it would solidify a bullish reversal. Always remember to manage your risk and stay informed. The market can change direction swiftly.